tell you guys exactly how I would learn to trade. If I had to start over, this is what I would suggest you do. So I've been trading for almost 6 years now. So I'm gonna tell you guys everything that I wish that I knew starting out, and how I wish I would have went about it. Right? Because it took me 2 years to become profitable. Right? So along those 2 years, before I started, I would say it took me 2 years, but it's 2 years of every day. And I still do this every day. I'm doing it now. And I gotta work at 11 o'clock. I'm on here on the charts now. Market is closed tomorrow, but you still gotta keep practicing. Right? So number one is gonna be you gotta have the discipline. You gotta practice it. Right? It's no other way around it. Regardless of what I'm about to tell you, if you don't put in the hours that's needed, it's not gonna work. It's not an easy way. Right? But I'm gonna tell you the easiest way. And I'm gonna tell you guys things that you can do to avoid some of the things that I had to go through. Alright, so trading as a beginner, 2025 edition. So number one, of course you gotta have a platform. And there's two that I would say I kind of recommend. Number one, you need a trading platform, so one that you're going to actually put your money on and do your trades on. And then secondly, I would say you need a platform that is good for charting, right? So there are some platforms that allow you to do charting, and I'm not talking about a Robinhood chart, okay? So you want something like TradingView, or if you use the Thinkorswim, they have a good charting system as well. But if you don't have Thinkorswim, I would suggest you download TradingView. And the reason that you want to do that is because you want to be able to do what you call technical analysis. Technical analysis basically tells you by the charts when is it good and when is it not good to kind of get in the trade, when to hold, and everything of that nature. So you want to, number one, you need to have the platform. So I suggest, as far as charting, technical analysis, you need to download TradingView. And then as far as executing your trades, if you're a beginner, Robinhood is amazing for beginners. The platform is pretty easy to use, and they have plenty of tutorials on the platform itself. One thing that I will suggest you do as well is, once you get an account made, I would make your account a cash account. And so you have a cash account and a margin account. With a margin account, you can only do 3 day trades a week, right? And if you try to exceed those 3, then you will get marked as a pattern day trader, and you get flagged for 90 days, 60 nights, something like that, right? But with a cash account, you can day trade as much as you want. You can only use the money that you have. So let's say you got $400 to trade, you can only use that $400 every day, right? Unless until you start moving up and you have more in it or less in it. Okay? So that's first thing, you need the platforms. So secondly, you need education. This is the biggest part. The biggest part is the education. So what do you need to focus on learning, right? Because there are tons of different strategies. You know what I'm saying? So some people trade straight candlesticks. Some people do Fibonacci. Some people do support and resistance. Some people use Bollinger Bands. Some people use the EMAs. It's a plethora of information. And the hard part is kind of knowing where to start, right? So what I'm going to do, I'm going to give you 6 things to focus on. And when you focus on these, no matter the way that you decide to trade, you're going to have to understand these either way, right? So these are the 6 things that I'm going to give you. Actually, it's probably going to be 7. I'll throw a bonus one in there. So number one, if you want to get started trading, the number one thing you need to understand is the option contract basics, right? So trading options and trading regular stocks is not the same thing. So when you are trading stocks, I'm just going to give you an example. Let's say Apple costs $100. If you buy 1 share of Apple, that's going to cost you $100. If it goes up $1, you're going to make $1. If it goes down $1, you're going to lose $1. And that depends on how many shares you have. If you have 5 shares, it goes up $1, you make $5. It goes down $1, you lose $5. That's totally different when it comes to options. So options give you the right, not the obligation, to buy 100 shares at a certain price. All right. But for me, the way that I trade, I am only concerned on buying the contract at a certain price and selling it for more than what I bought it for. Okay. So you could use that same $100 on Apple and buy a certain contract, and you can make $20, $30, right? It depends on the contract, okay? So you want to focus on the option contract basics, all right? So you want to know the things such as the premium, the bid and the ask, all right, and strike price. When it comes to option Greeks, you want to understand two things. What is delta and theta? Those are the two most important things as far as the option contract Greeks, in my opinion, all right? So understand option contract basics. That's number one. Everything else is about to be technical analysis. All right. So I'm a firm believer that technical analysis is king. Nothing wrong with fundamentals. You need to have an understanding of both, but technicals is where the money is made, in my opinion. Okay. So once again, technical analysis is the understanding of the chart. All right. So everything else is going to be the chart. So you're going to need that TraderView app to see this stuff. So let's get into that. Understand time frames. All right, so time frames on the chart are important because it's going to tell you the view, right? So you need to understand if you're looking at a daily chart, or if you're looking at a 5-minute chart, a 1-minute chart, you need to understand what you're looking at as a trader, because these different charts can tell you different things, right? Just because a 1-minute chart shows you that a stock is going down, the daily chart can show you that a stock has been going up for 15 days in a row, right? So next is going to be the candlesticks. Candlesticks are super, super, super important. And it's going to be the base of almost all trading. You're going to have to understand candlesticks. Okay, so the candlesticks are important because they give you information about the buyers and the sellers in that given time. So what you're going to notice when I'm going through these things is you're going to notice that I am talking about one topic and it's going to tie into another. All right, so the candlesticks are attached to the time frame. If the time frame is a daily chart, then each candlestick on that daily chart represents one whole day of data. Okay, so you have a large view of data. If you're looking at a 1-minute chart, each candle is going to represent 1 minute of data. So you're not going to have nearly as much data on a 1-minute chart than a daily chart. So I know somebody's going to ask which one is better, and we'll get into that. We'll get into that later. All right. So something else that's super important about candlesticks is you may say, well, how do you know what they mean? And you want to break it down to 3 things. How to read a candlestick 101. The easiest way to read a candlestick is OCW. Understand where it opens, where it closes, and where the wicks. All right? Those are the only 3 things that's important. Where does it open? Where does it close? Where are the wicks? That's going to tell you all the information you need about the buyers and sellers at that time. All right? So the wicks are super important. If you have a long bottom wick, that means buyers are 9 times out of 10 in control. A long top wick, 9 times out of 10, the sellers are in control. The color of the candlestick does not matter. All right? The color of the candlestick does not matter. You can have a red candle that is bullish. You can have a green candle that is bearish. It's all about the information on the buyers and sellers. So think about the open, the close, and the wick. Okay? So candlesticks are super important. All right. Now also where you see them at is super important. So that gets into the next thing, number 3. Is that gonna be 3? 1, 2, 3. It's 4. Number 4 actually. Number 4 is going to be support and resistance or key levels. This is super, super important. All right. This is super important for the way that I trade, because the key levels give you information as to where you expect the action. So when we are trading options, you are basically betting on the stock to go up or to go down. There are certain strategies that bet on the stock to go sideways, but as a beginner, that's not what you want to focus on. All right, you want to focus on finding out if a stock can go up or is it going to go down. Okay, so that is what you want to focus on there. And what can give you that information is understanding the key levels. The key levels are going to basically tell you in simple terms where to expect the buyers and sellers to fight again. Okay, so expect the buyers and sellers to fight again at this place of support and place of resistance. So what is a support and resistance? A support is a place that a stock has had trouble going below. All right, and you want to see this stock have trouble going below this point at least 3 times. I like to say a minimum of 4, but bare minimum 3 times. Support is, think of it as a floor. All right, Resistance is the opposite. The resistance is the place that the stock has had trouble going above. And the same exact thing, you want to see this have trouble going above it at least 3 times. Okay? And I like to call them key levels because all of them are not created equal. So now we're about to tie in our previous stuff, right? And now I'm not going to get too deep into it because this is for beginners, all right? We're not going to get too deep into it, but I'm going to tell you that the larger the time frame that you find a support or resistance on, the harder that it's going to be for the stock to break it, okay? So let's say you have a 1 minute chart, right? So on a 1 minute chart, each candle represents 1 minute. You have a spot that the stock has had trouble going below. It's not going to be super, super hard for it to break it eventually. But let's say you have a stock on a daily chart. Remember, each candle represents a day. And the stock has had trouble going below this point for 3 years. The daily chart support is going to be a lot harder to break than a 1 minute chart. Okay? And you can bet your bottom dollar or top dollar, whichever one, that once the level is broken on a larger time frame, you are going to get a larger move. That is the basis of my entire strategy. Finding the larger move. Why do you want to find the larger move? It's because you're going to make more money. There is no sense of you trying to chase things up and down. Just wait until you find the large moves. That is going to be the easiest thing. Okay? That and buying a dip, which that's a whole nother type of strategy. All right? So that was support and resistance. Number, what's this, 5. Understand trend lines. All right, so trends and trend lines. What can this tell you? This helps you with technical analysis because it gives you a sense of where the stock can really bounce, or if it breaks this point, it can fall. So a trend line can act as a support and resistance, depending on where it is. And this is going to help a lot when it comes to chart patterns, because chart patterns are nothing but a combination of trend lines or a combination of a trend line and a level. I'm going to say that one more time. Chart patterns are nothing but a combination of trend lines or a combination of trend lines and a level. These trend lines can act as a support or a resistance. All right? And the trends are important because the market moves in 3 ways. It has higher highs, higher lows. It has lower highs, lower lows. Or the one that we want to avoid, the market's going sideways. Okay? So not a whole lot to trends and trend lines. Next, you have chart patterns. So before I say chart patterns, notice how you'll see when I'm talking about this stuff, it kind of just keeps building onto each other, right? So I'm not talking about chart patterns before I talk about candlesticks and trend lines, because if you don't understand candlesticks and trend lines, you won't understand the chart patterns. Everything you're learning is in this direction for a reason. So make sure that if you want to watch this back over, rewind it and notice how I place this stuff as far as the chronological order. All right, chart patterns. This is my absolute favorite, man. I love chart patterns because this gives you the high probability setups. So a question that you're going to have as a beginner is, well, how do you know if a stock is going to go up or if it's going to go down? You don't know for sure, right? This game is about probability, okay? So the game is about probability. Because you have a 99% chance of being right, you still have a 1% chance of being wrong. That's why you got to have risk management, all right? So probability is everything. And these chart patterns give you these high probabilities or a low probability for the trade to not do on what you think it's going to do, all right? There are 2 chart patterns that I'm going to give you today. And I'm going to let you go down a rabbit hole and find out about other ones. The number one, my favorite chart pattern is the flag pattern. The flag pattern is a continuation pattern that tells you that a stock is more than likely to continue in the direction from which it came. So you will hear me post a lot, or you'll hear me say a lot, or you'll see me post a lot about a bull flag or a bear flag. You've probably already seen it. So a bull flag is when a stock has had a nice run up and has had a pullback, right? So when it has a pullback, it literally forms a flag with those trend lines, right? And the trend lines act as a support and resistance. So usually when the stock breaks the trend line, you expect it to keep going towards the upside. note that it's called a bull flag. Okay? You only play a bull flag to the upside. Don't play a bull flag to the downside. Right? So a bullish flag, play it to the upside. It's a high probability setup that the stock is going to keep going upward. Right? Then on the opposite end, you have a bear flag. The bear flag forms from when a stock has dropped down, then it has a pullback towards the upside. Okay? And it's the same exact thing. It forms like an upside down flag pattern, and you're looking for it to break downward. All right? And you're looking to only trade a bear flag to the downside. These are high probability setups, and they are continuation patterns. Okay? So those are flags. Those are my favorite chart patterns. Those are going to show up literally almost every single day in the stock market. All right. The last pattern that I give you as a beginner is going to be a pennant pattern. So a pennant pattern is a neutral chart pattern. Okay? So it's a neutral chart pattern because it can go either way. And what this forms is a stock has a run up or a run down, and the stock will consolidate. And what happens when it consolidates is you will see one trend line going upward and another one will be going downward, and they're going to look like they're going to converge. So you really don't know which way that chart pattern is going to go, which is why it's a neutral pattern. You have to wait for the breakout. Triangle patterns can go either direction. Okay, but the rule of thumb is to still look for it to break the direction from which it came. Okay, so if it was bullish before it formed the triangle, you more so would look for it to be bullish when it breaks out, and vice versa. Okay, so that's chart patterns. So we've talked about option contract basics. We've talked about time frames. We've talked about candlesticks. We talked about support and resistance or key levels. We talked about trends and trend lines. We talked about chart patterns. So I'll give you one bonus one. And this one is one that I don't suggest that you focus on as a beginner. I wouldn't suggest focus on this as a beginner, and that would be indicators. So why do I say I wouldn't focus on indicators? I would say that because indicators only move by how the candlesticks move, right? So the indicators, most of them are lagging, which means that they only form after the candles have already formed. So you need to be able to understand those candlesticks. Okay, you need to understand how to read the chart, which is why I have candlesticks in the front, the indicators at the very back, right? But some indicators are really good that I like to use. So I like to use two main ones that I love. Number one is volume. So volume is important just simply because it tells you how many people are trading at that time. Typically, when you are playing a pattern, you want to see high volume when it breaks out. And you want to see that because that high volume tells you that, okay, people are really liking this stock at this place. Okay? So volume is something that I use quite a bit. Another one that I use quite a bit is relative strength index, or RSI. So the RSI it serves two purposes for the way that I trade. Number one, it tells me that when a stock is overbought or oversold, quote unquote. And I say quote unquote because a stock is truly never overbought or oversold, because as long as there's buyers, it's going to keep going up. All right? As long as there's buyers, it's going to keep going. And if you don't believe me, take a look at Tesla in 2019, 2020, and watch how much it went up and tell me what that RSI was. All right? The second use of the RSI, I don't think I said this, is above 70 for overbought and then below 30 for oversold. So usually when something's below 30, you expect it to bounce, but it's not always the case. All right? People don't want to buy it, it's not going to go up. Okay. The second use of the RSI is seeing a setup called bullish divergence or bearish divergence. And that is just a setup that lets you know when a stock has a great chance to reverse directions. All right. So I have a video on that somewhere on my page. I'm gonna have to try to look for it for you guys because it's definitely down there in the hundreds of posts somewhere. But if you can find it, I definitely have a video about divergence. Okay. Let's see. Anything else on indicators? That's about it. So that's 7 things. That's 7 things that I gave you what you need to focus on. And that's it. Those are the only 7 things that you need to focus on as a beginner. These are the most important things for you to learn, because no matter what way you decide to trade, you can trade how I trade, you can trade how someone else trades. If you don't understand those basic concepts, you will not have the understanding that you need to succeed. Most of the times when people come to me and they ask, they have a session or whatever, and we get to the root of the problem is they don't understand the basics. All right, so they don't understand the basics on a level on which they need to. Okay, so I literally, to this day, I've been trading for almost 6 years. I only use the basics, but the difference is I have a deep understanding of the basics. You don't have to have 10,000 indicators. You don't have to have 10,000 levels on your chart. You need to understand the basics and how to make it easy for you. Everybody's going to think differently, but I guarantee you, no matter how you decide to trade, you are going to use these concepts in any type of way. You're going to use those concepts. I guarantee you. So if you want to get started trading as a beginner in 2025, focus on those 7 things. That's it. I promise you. You focus on those 7 things, over time, you will learn to trade. Once again, I told you it took me 2 years, but it was 2 years of every day. If you do what I'm telling you to do in this video, I promise you, it will not take you 2 years. It took me 2 years because I went down a rabbit hole for 2 years to find out what worked for me. I watched thousands of videos, paid for little classes, things. I did all that stuff when I was trying to learn how to trade, right? But then it just started making sense. So what I learned is I took bits and pieces from different people and made it into something that made sense to me. And that's what you're going to have to do. The way that I trade might not make 1,000% sense to you, and that's fine. We have 2 different brains. But I promise you, those 7 things are going to come up. And if you don't focus on those, you're going to wish you did, no matter how you decide to trade. So what I like to call that is RJ's 7 pillars of options trading, right? So those are the pillars of options trading for me. And if you want to learn about these more in depth, I actually have a free YouTube series that started today. Check the link in my bio to the YouTube. Episode 1 is out today. And it's actual classes from my real mentorship, right? So I'm teaching them the very, very basics. It's going to be 4 classes. The first 4 classes are when we go over these same principles that I just taught you guys just now, but it's going to be a lot deeper. So if you want to check that out, definitely check out my YouTube, the link in the bio. Yeah, so that's really it, man. If y'all got any questions, y'all definitely ask some questions, man. Any questions? No question is a bad question. Focus on those 7 things. See if y'all have a question about anything. Oh yeah, no problem at all. No problem. Trying to make this a little bit easier for y'all, so y'all don't have to go down the rabbit hole like I did for 2 years. What's going on? Let's see who has a question about anything. If you don't want to ask it on here, you can send me a message. I'll be up. So I said I gotta go to work at 11, so I'll be up tonight. So shoot me a message on the back end if you don't want to ask it here. Do I still have my Discord? Yep, I do still have it. And I'm live trading pretty much every single day right now until March. That's when I'll be working during the day. So right now I'm pretty much live trading almost every day. Do you make a move when a position breaks a key level, or do you always wait for the retest? You want to always wait. The safest thing to do is always wait for the retest. 9 times out of 10, you want to wait for the retest. Because 2 reasons. Number 1, it is a lot safer, right? So the break and retest gives you a clear point to where the trade works and where it doesn't work, right? So that's number 1. You have a clear point of where it works and doesn't work. Number 2 is the name of the game is to kind of buy low, sell high. right? And that's the one thing about chart patterns that is a little bit tougher is with chart patterns, most of the time you're really buying high and selling high, right? And a lot of times if you kind of get caught in the dip on a chart pattern, a lot of people get freaked out. So break and retest is definitely the best strategy in my opinion. And I've been trading chart patterns for 6 years, and I'm saying break and retest is definitely the best. I love the break and retest. I've had the most success with break and retest for sure. That's a good question. Anybody else got a question about anything? Like I said, if you don't want to ask me on here, you can shoot me a message on the back end. What time are the classes? So the classes are going to drop every Sunday at 12. So every Sunday at 12, I'm going to drop the classes, and I'm giving you guys the first 4. So we have 10 of them in the mentorship, but I'm only going to drop the first 4 because the first 4 are going to be the very basics. Then after those 4, it gets pretty complex. So I'm just dropping the first 4, but they're going to be every Sunday at 12 for the next 3 weeks. Do you use moving averages as key levels on charts? No, I do not. I just use support and resistance as key levels. The only time I use moving averages is 2 instances. Number 1 is when the stock has dipped a lot and I'm looking at that 200 MA to see where it can possibly maybe bounce. Then number 2, sometimes I like to use the Ripster clouds to kind of give me a sense of how strong a trend is when I'm day trading. Some good questions. Anybody else got any questions? Once again, this will be saved. So if you need to go back on it, it'll be on my page. I'll save it on my page. When you're charting your support or resistance, do you go bottom, top, or middle of candles? Is there something else you look for? Yeah, you want to go for the bottom or the top of the candle. So you want to go off the wicks. If there are wicks, you want to go off the wicks. If it's not wicks, then you want to do the solid body. So you do the end of the candles is where you want it to touch. End of the candles is where you want it to touch at. Anybody else got any questions or anything? This live is saved. Like I said, it's saved so you can go back and rewatch it. Also, I'm going to drop a video here soon about 2 of my favorite stocks to watch this week. So those 2 chart patterns that I talked to y'all about tonight, you're going to see them on the 2 stocks that I'm going to drop. So make sure you guys leave a comment on that, man. Leave a like and comment on it. So the same 2 chart patterns I talked to y'all about. There are 2 stocks that I love this week. I'm going to drop it on there, and they have them. So we'll see if they play out or not. But that's really all I got, man. If nobody else has any questions, if you got a question about anything, just shoot me a message. This live is saved. It's going to be on my page. So I appreciate y'all hopping on. Finna get ready to eat a little food and chill out for after go to work. So I appreciate y'all hopping on, man. If y'all need anything, just shoot me a message. I'll see y'all later.